I think this is our 5th seminar that we've held over the last 2.5 years. We've been tending to have two each year. And basically what we're trying to do is bring the local community, as in our clients and our business partners, in to really hear what the bank has, its view on global strategy. So this time around we've had the benefit of having Claudia and Alan coming down, who have got great amount of expertise and experience that they bring with them to give a macro view of the global economy.
Globally, we're constructive on the economic outlook, driven by strength in the US, a stronger economy in the UK. We think Japan continues to register positive levels of economic growth. The eurozone is clearly going to drag the average down, but we don't think that the eurozone will find itself in recession in 2015. Is likely to see a very gradual, sluggish recovery throughout this year.
Inflation is very low. The drop in energy prices pushing inflation expectation on the downside. So interest rates are set to remain very low for the time being. Plus the quantitative easing and all the program announced by Mr. Draghi have negative pressure on interest rates. So clearly interest rates are on the downside.
We provided an overall idea of how we think portfolios should be built with the diversification that's required to protect client assets in a year where we think volatility and risk are going to be higher than they have been for the last couple of years.
We are suggesting to buying real estate companies or real estate, and particularly in some region where the level of price is still very low, which is Belgium, some part of Germany, and this is very important, not only to diversify portfolio, but you have a sort of yield on this asset class, which is very resilient.
And what about Russia? What role does Russia play in Europe's economy?
It's not as big a trade partner as the general.
Much has been said about the destabilizing effect that elections in Greece and Spain could have on the eurozone. But today, SG Hambros senior strategists told me that although they worry about politics all the time, what really matters is what goes on in companies' plants and boardrooms.
Do we worry about politics all the time? Is that a big factor in our asset allocation? Not necessarily. What we believe really matters is what goes on in the real economy and in companies' plants and boardrooms and so on. And we don't find that political factors have such a bearing over time. So that could add some volatility, it could add some risk in markets, but we don't think it's going to greatly alter the outlook for the Spanish economy. The other factor is that we don't see the level of support enjoyed by Podemos today as being sufficient for them to form an administration. They would have to look for some form of coalition, and in a coalition you do have to compromise.
What of Spain's economy then, and how do you think it's faring, and how do you think it's likely to fare over the next 12 months?
Spain, we think, has recovered very well from the impact and the aftermath of the eurozone crisis and the Great Recession. We're now registered 5 consecutive quarters of positive GDP growth in Spain. Consumer confidence is rising. Consumer spending was up 2% last year. Car sales were up almost 20% over 2014. And the Spanish economy has begun to reap the rewards of the very difficult austerity measures that were taken. The cuts in unit labour costs have actually begun to improve the competitivity, making Spain a much more attractive destination for inward investment, with many companies shifting capacity to Spain to take advantage of the productivity and the quality of the workforce. So generally, a constructive view on the Spanish economy, which we think, along with Ireland, has been the one to emerge best from this very difficult recession and austerity package.
What of the strength of the pound against the euro? Do you think that will continue, and what are the implications for those of us living in Europe and using both currencies?
Yeah. The sterling, like the UK economy, tends to be stuck between the US on one side and continental Europe on the other. The dollar, we think, will be the strongest developed market currency in 2015 again. We think the euro will be the weakest, and so we see sterling rising modestly against the euro. It won't be as big a move as we've seen recently, but still some upside in sterling.
But that's up from where it already is.
Yeah.
Good news for Gibraltarians thinking of spending money in Spain, but not necessarily such good news for businesses that rely on Spaniards buying locally.
I think we get a lot of good feedback from our clients and the intermediaries we work with. So it's something that we will continue to do. I think they're getting better and better as we go along. So as long as people want them, we'll be carrying on doing them.